This is the only moving average trading video you will ever need, and trust me, you're probably doing them wrong if you're not profitable. And I've been trading for 10 years, so I know what I'm talking about. So sit back, listen and learn. Moving averages are a trend following indicator, and they are calculated by taking the average price over a period of time. Period of 20 would be 20 days, period of 50 would be 50 days, and the last two lines would be 100 days and 200 days. Okay, now let's talk about trading with the moving averages. So if the candlestick price level is above the moving average, it means it's on an uptrend, and if the price is below the simple moving average, it's on a downtrend. To confirm the trend, we need to use multiple moving averages. My absolute favorite one is 20 and 50. However, most people trade the crossover of moving averages, which can be effective, as we can see over here. Push, exhaustion, had a nice little crossover just over here and went towards the downside. However, most of the time that won't be the case. We are currently getting a crossover once again. The 20 moving average, which is the yellow line, is crossing above the 50 line. This shows great technical analysis and tells us to buy. It even has one of the most popular and widely used candlestick price action, which is a bullish engulfing candlestick. However, if we took this trade, I don't think it would do too well. And let's see. And it does go towards the downside and reaches our stop loss level. But why? Well, it's simple, because we don't want to be entering our trades just off the break of moving averages. We want to be entering when the candlestick price level bounces off them. So take a look at this example. There was a break of 20 moving average passing through 50. This is already a bullish confirmation. However, we had a move towards the upside of around 43 pips. Likely there's going to be some form of exhaustion. So the way I like to see it, the top of the candlestick and the bottom of the moving averages is free space of movement, and we need to touch that bottom of the moving averages before we can consider entering our trading opportunity. So let's quickly take a look. It bounced off in between the 20 and 50 moving averages. This is a great confirmation to go long. Look at this beautiful trade just over here. We want to move our stop loss a little bit lower. Around 50 pips should do to cover the two moving averages and also cover this previous area of bottom level. Obviously you could aim for 2 to 1, but what you want to do is always collect some profit and close off positions each time you reach a milestone. There's likely going to be a form of selling pressure over here, pushing it back down. So this is why we want to partially close our trading position just in case it pulls back and then suddenly goes down, because it does happen in Forex. So now let's just see what actually happens with this trade. We had that huge push towards the upside. It bounced off once again. Look at this beautiful wick. Nice little candlestick towards the upside, towards the area of resistance. We had very slight bearish pressure, but then the next candlestick over here made a new high, which means this previous area of resistance has now been broken. We should see a continuational move towards the upside. So look at this, and then boom, we continue moving up every single time, and probably we will reach our take profit level. Let's just see. There we go. Beautiful price action trading. And if you've been listening, you probably spotted more trading opportunities. Look at this bullish engulfing candlestick over here, another one over here. This one probably better because it actually bounces off the 20 moving average line. So potentially you could have entered 2 more trades, which would have done you at least by the minimum another 60 pips. Now let's rewind a little bit and learn something totally new. So we're going to use the 9-day period moving average and 200 moving average. The 200 moving average will act as a form of resistance, so potentially we need to break that. And if you saw that, you could potentially even take profits a little bit earlier, just because you believe the resistance over here could be bouncing back towards the downside. Overall market direction is bullish. We should stick with the bullish trend. So let's see what happens. Yet again, it goes towards the upside and actually manages to break the 200 moving average. It gives us, look, a nice bullish engulfing candlestick once again. This is a great indication to continue moving towards the upside. So many confirmations now. Moving averages below, candlesticks above, new high has been formed, bullish engulfing candlestick pattern. This is beautiful. This is what we want. And if we just play along, look at this nice little rejection. If you entered over here, you can potentially now just keep your trade running. These two moving averages act as a short form steep trend continuation pattern. If we enter this trade, we keep it open until it actually crosses. I'll give you an example. Look at this. Goes towards the upside, never breaks the 20 moving average. Look at this. Beautiful uptrend, steep uptrend. Never broke it. So 20 pips, look at this, 40 pips, 60 pips, 80 pips, 100 pips profit. From a 50 pip stop loss to 100, 2-to-1 risk reward straight away. You only want to close off your position when it breaks the 9 and 20 moving averages. This is when you want to close it off. Otherwise, you don't close it. What's the point? The trend is heavily bullish. Why on earth would you close off your trading profits? If it actually breaks like that, you can close it off just over here. So potentially 1-to-1 risk reward. However, I believe if you're not greedy enough, which you shouldn't be in Forex, 2-to-1 risk reward. If you've done that, you should have closed it off and made your money that way. Even though we had the 20 moving average covered, the 50 moving average slowly but surely moved inside our stop loss level, which is another layer of protection. If the market pulls back, we can have a nice little movement towards the upside of the 50 moving average, which also gives you great trading opportunities. So I always teach you guys to trade with the trend, but sometimes the market is just not available. Sometimes you have to take a pullback trade, and this is going to be the opportunity to do so. So I'm using all of the moving averages, 20, 50, 100 and 200 in this case. This is the 4-hour time frame, and this is what I'm seeing, an M pattern formation. And the reason I say it's a pullback trade is because if we have a look at the daily time frame, we are currently on a strong resistance level, right? We are far away from our 20 and 50 moving averages. Do you remember when we talked about spacing? That little space over here, well, not so little, 150 pips, is likely going to be that exhaustion, which you could potentially enter a trade short in this case on the lower time frames and bang yourself a proper pullback trade. So if I saw this and I saw a shooting star pattern as well, this is a great confirmation to drop towards the downside. So for fun, let's actually mark the 20 and 50 area on the daily and come back to the 4-hour time frame. And this is the space where likely we need to aim for, right? So look at this. If it manages to break that M pattern, that's 184 pips. Does it manage to break the 50 moving average at any point? Yes, it does. Look at this. Short position, 50 moving average, bearish engulfing candlestick, closure over here. You could potentially aim for a nice little trade of 2-to-1 to 3-to-1 risk reward. Let's see what happens. It just simply drops towards the downside and would have been a beautiful trade. And after that pullback trade, look at this. It just bounces back up. Daily time frame has now reacted towards the 20 and 50 moving averages and straight away gave us a bullish engulfing candlestick into a new high as well, which confirms the trade bias. Bulls are definitely there, and we can see that the daily trend is still very much bullish. So if you enjoyed this video, make sure to watch this one because I live trade with moving averages many times, and if you want some live trading or watch me actually use the moving averages, you should watch this video next.